Hey guys, good to see some of you already in the chat. What a day, what a day. We'll talk about today's movement, yesterday's support, resistance, all that kind of stuff in a bit. Hello, hello. Nice. A bunch of people already here. Always good to see. How are you guys doing? Everyone doing all right? Everyone kind of surviving the chop, or have you all fallen to the crabs? Good morning, Duck. Good morning to you too. I mean, it's not morning for me, but wishing you the best morning anyway. How do you feel about England beating Germany? I really couldn't. Like, I'm glad that the Germans are not gonna honk the entire like rest of the EM. Other than that, I'm like whatever. Not the biggest. It's fun to watch, but I don't really care. If Germany loses, they lose. Not the biggest fanatic in that regard. Can you explain what you mean by crab briefly? Yeah, we'll do that in a bit. Before I start, shout out to Blockfolio, the sponsor of the show. Their links are in the description if you want to check them out. They still do all the portfolio tracking that we're all kind of used to. And they now also allow you to trade on your mobile phone. Works really nice, and I mean, I have no complaints. I've been using it from time to time. Recently, I mean, there's not really that much to buy, right? You can swap assets there if you want to, like from ETH into whatever, into Dogecoin. I haven't felt the need to do it lately, but still, they have some cool stuff there. So if you want to check that out, check it out. Links are in the description, like I said. So now to the question of what do I mean by crab, right? So a crab, crabs when they run, right? When they run, they go sideways. Like if you've ever seen a crab run, they don't run forwards. They just legitimately just go sideways, right? And what I mean by crab is a choppy sideways market, right? And that fits pretty well. That's why I'm saying crab. I don't know if that's like an actual term, but I like to use it, so that's why I do it. Ducks eat crabs. Dude, I wish I could eat this crab, because I mean, I'm getting bored too, right? It's not just you guys, it's me too. Laughing my ass off with the lines. Yeah, I'm terribly bad at explaining stuff, but I mean, yeah, sideways, forward, you get the point. Hello from North Korea. Hey man, I highly doubt that you're from North Korea, but if you are, I mean, fucking hell, would be loving that. So yeah, we've had some exciting stuff, some less exciting stuff happen, so we'll talk about it briefly, and then we'll go over maybe some altcoins, maybe like the coin market cap list, see what's up. But yeah, I'll let you guys handle the second half of the stream, but the first half is gonna be like Bitcoin and maybe ETH. So high time frame on the monthly, nothing's changed, right? Still looks the same. Weekly time frame, we've had a weekly close, which a lot of people got excited about, and I mean, I kind of get where they're coming from, right? So what we had basically was we didn't really make a new lower low close, we just held it. For me, that isn't really significant because we're still in this high time frame support area, right? So like that doesn't mean anything to me. But I mean, I get where the excitement comes from. Now, if this was different, right? If we traded down here at support, right? And this is something I can show you like a good example, and like why I wouldn't be shorting ETH, for example, right? Even though I think ETH looks pretty meh in general. But the reason why I wouldn't want to be shorting it is when you have like a high time frame support area and that kind of gets front ran, you oftentimes get a second test, right? And that's a pretty good bullish setup. So I wouldn't want to be kind of shorting into that, right? Now, in general, ETH still looks pretty, like turnover log chart still looks pretty bad. But if that happened for Bitcoin at support, I mean, that'd be a different story. It didn't happen, right? We're still far from support, far from resistance. We're like smack in the middle of things. And I mean, if you want to take trades there, fine by me, right? But you're always going to be kind of like the upside's going to be limited, the downside's going to be limited, at least setup wise, right? This could just break through support or break through resistance. But like your setup, if you're taking an entry in the middle of the range, you can only kind of target the high or the low, realistically anyway. So that's not something that I want to be trading. I much rather do business at the low or the high, right? So right now it's just super boring. And the lower time frames, they're kind of choppy, really. Like we've been talking about the 32K range, right? And that's been acting as support for a couple times. If you look at it, 3 times, did an excellent job. And then we had a breakdown last week, and that didn't really lead to anything. Bounced from there, ran into resistance, broke down again, didn't really lead to anything. Now you could say, why are you still using this? This is clearly not doing anything. But something that often happens is you have a support, gets tested, gets tested, fails, gets reclaimed, and then it just works as usual again. And then if you delete it after it's failed, you're kind of doing yourself a disservice, right? And I'm still in the camp that this is probably going to be support again. Now, it's a little bit different when you have like 2 breakdowns here, because then it's just like a choppy market rather than, okay, you have like a range reclaim, right? So for example, if you look at this, right, you could be making an argument. If you look at this, you could be making an argument for range reclaim, right? Because you've broken the range to the downside and now you're trading back into it and trading higher, right? Then you could say, okay, this is range reclaim. But what's happened instead is we've had the range reclaim and then broke it immediately again and then went up. So for me, that just kind of means we're in for chop, right? And that's been kind of playing out. And now what we've done, basically more indication of why like I'm saying the market is super choppy and just don't be too aggressive in either direction, is that we've done the same thing with the daily support here, daily resistance here, right? We've ran into resistance, and I mean, I said Monday that I don't like resistances that get tested like this closely together. Like whenever you have a resistance and you test it and then you get rejected and you immediately test it again, there's a good chance that it's going to break to the upside, right? And that's what happened. But instead of having follow through on that breakout, we've had complete dumpage today, right? So just incredibly choppy market. And if we start losing that again, I think we're going to go back to 32K. And I mean, that's still support. It's a pretty shitty one given it's been chopped through a bunch, but it's still support, right? So that would be the next target. So high time frame wise, nothing of interest. Low time frame wise, I mean, not that much. If we start, like if this daily, for some reason, reverses all that bearish action today and closes back above 35.6, like 35,600-ish, then I could see like a sustained move towards 40K, right? I think anything above 40K is way too greedy, makes no sense. But if we start closing above there, right, something like this makes sense to me. Let's say we close bullishly, right, and you stop somewhere below this because you don't want to get wicked out on next week, and then you trade it like this, right? That's fine if we show some strength today, I think. And that's kind of the crab play, as in the range play. Anything but that, I mean, yeah, it's not really that interesting. And if we close below it, the opposite trade gets interesting. Now, I'm not going to take that because I'm not really interested in shorting. But if we close below it, let's say we close somewhere down there, I think this kind of trade is a decent one to take as well. It's tiny, it's barely one risk reward, but I think the chances of it playing out are pretty high, right? And you kind of play it into 32K again. Or if you're like even more bearish, you could aim for the breakdown and then it's a little bit better on the risk reward side of things. Okay, hope that makes sense. I mean, that's Bitcoin. There's really not that much to it, right? This shit's boring as fuck. And yeah, and I can't do anything about it. I can't make it exciting if it's not exciting. And I'm kind of expecting this to chop around for a little bit longer. So yeah, any questions to that? Anything that I've kind of missed, didn't explain properly, or anything that you'd want to have cleared up? Can we talk RSI? I really don't care about RSI. Like, RSI is an indicator that I don't use and I think isn't particularly helpful. So if I talk about it, I'm just gonna say like this is not something I use. I used to use it back in the past as confidence. I don't even do that now because it's not really giving me confidence, because no matter what it shows, I'm just gonna be like, okay, not really interesting to me. But I mean, you can use it, it's just not for me. Okay. Hey Doug, you seem to use support resistance zones more so than cred. Can you give a quick rundown for newer viewers? How you draw these? Basically, there's no strict rules about this, right? So how these work, right? When you want to be drawing like support resistance zones in general, right? There's no real strict rules for it. I like to look for swing points to do it, right? For example, you have like a pretty obvious swing point here, right? As in you put in like a spike to the upside and then you react violently to it. Don't revisit that immediately after, that kind of thing, right? You do have the same thing here and you have the same thing here, right? So like I look at these and I'm like, okay, which one is the most interesting to me? And then obviously what we've had, and this is something that you can only do like in hindsight on this part. So let's say you're at this stage of the market, right? You're like, okay, where is this? If this is gonna bounce, where is this gonna find resistance, right? And for me, what's the most important area on this chart? And it's obviously this one, right? Because what you've done is you've rated this high, you went above this high and then didn't manage to hold it, right? So in this case, this doesn't really matter too much. You can still see like that it had some impact, right? So found support here, but more importantly, found resistance here, right? It still had some impact, but it's not as important. This one is a little bit more important, right? So you look at this, you're like, okay, what happened is you've had resistance here, it got broken to the upside and completely faded. And this was the Coinbase news on top. So you know this is an important kind of area, right? And then you look, okay, what happens with that? Like, what do I do if we get back there? And the answer should be pretty obvious. You're gonna look for sells, right? And what happened was pretty much the exact retest of that, right? Because you know this area is important and you know, okay, this was basically a fake out of this resistance, and if you go back there, it's probably gonna be resistance again. And the same thing is true obviously for support, right? So if you look at lower areas, what we've had, where we've had breakdowns, and there's not really been that many, right? But for example, in this case, we've had a swing low down here, and you can see even if you're trading down here, right? Let me remove this. You're trading in here, right? You're like, okay, this is bearish retest. If we break down from here, or like in general, you can be bearish into this if you want to. But as soon as it's flipped, it's gonna act as support instead, right? Because it's acting at resistance here. If you get back above it, it's gonna act as support. And then you can just kind of look at how this played out. Acted as resistance first, didn't have any follow through, kind of found support here, and then broke to the upside. And in this case, didn't really give much of a retest, but as soon as it broke out, like an intraday time frame kind of retest in here, is all you got, I think. But yeah, that's kind of how I look for these things, like just areas that are important, and it's all like a little bit subjective. It's not, okay, you always have to use the swing low, you always have to use the swing high. Obviously depends on kind of what happened after, how price reacted to it, and so on. So I can't just say, okay, blanket rule. But in general, what I tend to look at are these swing points, right? And then in ranges, it's a little bit different because then I just look for like the smallest candles and that to like either an up move or down move, right? So for example, like one of the coolest things that we've had, like this range, right? So what we've had in here is the bottom range kind of at 3K, right? So we've had this massive breakdown, and then we didn't really have support down here. It just bounced out of nowhere, and that's because, I mean, it just broke down so hard that there was nothing left, right? And then it had a massive rally to the upside. And now you could be saying, okay, if this comes back, where do I want to be buying this? And usually it's the same kind of thing that we've talked about to the upside, right? Where you have this kind of structure, where is it going to find resistance? And I mean, this is not because it's a head and shoulders, but in general, that's just how markets tend to find resistance. And the same thing is true for this. It's just a little bit different, right? So it's not like an inverse head and shoulders kind of thing. It's more of a, okay, you've had a breakdown here, and this entire thing got engulfed by the up move, right? So this is going to be interesting again, because this is basically, in this case, the same kind of reasoning applies. This is basically the fake breakout to the downside. So this is going to be interesting, because if this holds, we're going to go higher, right? And so that's what I back then looked at. This kind of area, you can kind of like zone it out if you want to, down here. And that's basically where we found support, right? And then a bull run followed. Now, it's not going to be like, it's not going to work every time, but that's just kind of how I look at the market in general. Like, you want to be looking at where's the market faking out, what's kind of the swing points of a range. So for example, on the upper side, you could even say, okay, this is going to be support down here, right? But the thing is, like, if we go back there afterwards, right, you've had this massive breakdown. If you go back down there again, then panic is going to break out, right? So for tops and bottoms, like in general, like for the top and the bottom, what you usually try to avoid is just like setting something like this. Like, that's rarely how tops look, right? And this is rarely how bottoms look, where you have like the exact same level. What usually happens is you have a bottom that looks like this, and then it retests somewhere and then goes up, makes a higher low, right? And it's the same thing for tops, where it's like you have a top and then it goes down and makes a lower high, right? These two are really, really rare. So you don't want to be seeing like this retest this. So it's obvious that this isn't really the area to look for, because if it gets back there, I mean, it probably goes lower, at least for a little bit. And then maybe it does something like this, right? So we break down, reclaim it, and then it goes. And then you have the same structure again that you typically look for on bottoms. But yeah, I mean, for me, there's not really a strict rule. I used to have like strict rules, and I felt like, okay, it's just kind of making my charting worse, and it's impacting my trading negatively. And now that I have less strict rules and just look at it from case to case, makes much more sense to me. But yeah, those are like the easiest setups and easiest boxes to draw. And then in ranges, it's a little bit different, right? When you've had a breakdown and then you start ranging, you just look for the highest candle and the lowest candle, and then make your range out of that. Like for ranges, it's different. For bottoms and tops, like you usually try to look for something like that, or the other way around. But yeah, that's why, like, if you look at my range, right? It's funny that, like, if you look at my range, this is the high point that I set, and it's still true for this entire thing, right? And then you could have said, okay, this is the low point for this range, and it would have helped you as well, right? Look at this, like, at least for some time. And it's basically the same thing that we're dealing with right now. So there you go. I don't know if that helped any, but because, like, the thing is with these kind of things, like, if it's not completely rule-based, I mean, some people are going to be like, oh yeah, that makes sense. And some people are going to be like, okay, I have no idea what he's talking about. So I have no idea if that helped anyone. So, yeah. Doug, do you prioritize or look for untested breaks of swing high lows or to enter a trade? I in general, what I look for is like I want to be buying a level I don't want to be buying a level that's been tested 3 times. I want to be buying the first test, right? That's why I felt so confident buying like in here. Like I had no problem buying 32, 33, 34 because I was like, okay, this is gonna be support, and even if it goes lower, it's probably gonna bounce from there. Now I felt with each test afterwards, I felt less and less secure at that level. Yeah, first test, best test. Yeah, I agree. Is this the stream about crabs that I've been looking for? I mean, I'm not gonna show any crab pictures if that's what you're hoping for. But I mean, I'm kind of showing a crab picture here, right? So we just zoom in, look at this. There you can see the tracks of a crab in the sand. Do you delete support resistances after they get invalidated, and how they get invalidated? I mean, it depends, right? If I see something, if I draw a line, or if I have a line in general on the chart and the price literally does this, I'm gonna delete it because it's clearly wrong, right? So let's say we break down here again and do the same thing again, then I would say, okay, this has done its job, this support area. It's held price up a couple times and then it failed afterwards. I've made a bunch of money using it. I don't have to force it, right? But it's not quite there yet. It's getting there because, I mean, this is pretty shit, not gonna lie. Like, you don't want to have your support get disrespected like that a couple times after. Like, because you generally want to be like only have stuff on the chart that you would want to be trading off of, right? So for me, for example, this level has been so important that I've been buying it like a bunch of times, right? And the only reason why I have it on the chart is because I would want to be buying there. And the only reason why I have 40K on the chart is because I want to be selling there. For example, that's why like I don't have a level at 45 here. That's a good level, right? Like, don't get me wrong, like there's a good level there. But I wouldn't want to be buying or selling anywhere close to that, right? I wouldn't be selling it like around 40K, maybe like a breakout above there into like a range, right? Above it. Like that's what I would be comfortable with selling. I'm not entirely sure if I would want to be selling 45K, right? Like there's no trade for me to be had there other than like a quick wick, but nothing like substantial. That's why I don't have it on the chart. I could, for example, remove this because it's an older line. And I could remove this because I wouldn't be trading both of those. It's just something that I would have traded in the past, right? So in general, you don't want to have like, because there's something I see on a lot of people's chart. They have like, their chart looks like this. And then price does like something like this. Maybe he respects them a little bit, enough to fool them into thinking that those lines are helping them. But like, what the fuck are you going to do with this? Right? If resistance is always like $100 away, like, are you gonna find a trade, or is it just gonna like disrupt your trading? And I think it's gonna be a second. Like, it's not gonna help you at all. And that's why I've struggled so much with like putting this resistance in place, because like I wasn't entirely sure if I was like if I wanted to sell or buy this at all. But now I think it's important enough to kind of look at it. And I'm going to be making trading decisions based off of it probably today. If you close back above it, I think it's a decent enough level to make a trade. And if you close back below it, I think it's a decent enough breakdown to make a trade. So I can't recommend doing this because, I mean, if you're not going to do business at a level, why the fuck do you have it? And if the level is not going to change your bias or anything, like, you're just wasting your time. Because the worst thing is like and this is something that you can see in all of my charts, right? Like, and I think this is like one of my most crowded charts, and like there's how much space there is between each and every one of these, right? Like there's 20%, 30%, whatever. You can look at others where it's like even much more so. Do I have one that I've referenced in the past? Look at this. Like, Yeah, I could be drawing a level here, and I could be drawing a level here, and like these are all valid, right? It's not like they're bad levels. This was a range, broke to the downside, broke to the upside. But the problem is, like, if I'm not gonna be buying or selling there, it's not gonna help me at all. That's why I don't have it. And the difference between support here and resistance here is 150%, and I'm aware of that, and I don't mind it one bit. Because if I was like bullish on altcoins in general, like the only trade that I could be taking here would be buying support, right, and selling resistance. Like, I'm not saying it's gonna do that because I'm generally not bullish on altcoins right now. But if I was, and if I was looking for trades, that would be the only trade that I would have. And if I had like a bunch of lines on this chart, it just confused the shit out of me. And then like if I want to get long, I take this setup into resistance, and it's a decent setup, right? Now, if I have like resistance lines in here and resistance lines in here, I'm gonna be like, okay, this is shit setup because I mean, where the fuck, like it's the next resistance is basically right at where price is. And it's not bad resistance, it's just not something, it's not strong enough for me to say, okay, this trade is wrong or this trade is right. It's just not gonna give me anything. And then I'm just gonna be looking at the chart being like, okay, I can never take a trade. Dark turn on dark mode you scrub? Nope. Light mode much better. Okay, so yeah, I mean that's that. I think I've given enough of an explanation there. There's a CME gap around 31, 32K. I did message you about that on Twitter, but you didn't respond. You should see my DMs, dude. I get like a billion DMs a day. I can't respond like to even a 10th of them. And then like every time I look at it, it's like fucking paid offers to shill any like garbage on the planet for like a bunch, like for a bunch of money. And every time I look at it, I get depressed. So it's like, if I didn't get all these paid promotions, like I would probably read and look at every single DM. But given I don't want to be seeing that, and I do get like a bunch of shit from these paid promotion kind of agencies and coins and everything, I just don't want to deal with it. So sometimes I'm like motivated enough to look at my DMs, but most often it's just like I open them, I click on it, I go through it. It's like free. It's like 20 new DMs for the day, and then it's like the first 3 that I open are just like paid offers to shill garbage, and I'm just like, oh, fuck this. So not really, like DMing is not the best way to reach me. And CME gaps, I don't really care about them too much. Like if you're looking at CME gaps, trying to make trades off of it, I mean, fine by me. Generally speaking, when you have gaps, right? Let's say a market moves like this, right? Most of the time, like you can even look at this in general. Look at this price action, right? I mean, yeah, I know this is not the best range or whatever, but what the market did primarily in here was range. And then people are like, holy shit, CME gaps. And for the people that don't know, CME, generally the CME just closes at the weekend, right? So what happens is you have like Bitcoin move up, and then it's the same for the CME, the same for the CME chart. And then what happens is on the weekend, Bitcoin pulls back down, CME doesn't trade, and then on Monday it starts here. So how the chart starts looking like something like this, and then you have a gap here, right? And then people are like, okay, there's a gap there, it has to be filled. Now, if a market trades like this, almost every gap is gonna get filled because every price is gonna be kind of visited like a bunch of times. So in general, if you're assuming every gap is gonna get filled, you're probably gonna be right? Because the market is not trending. But when the market is trending, there's oftentimes gaps that don't get filled. Like to the downside, for example, you trade into the downside and then in the weekend you gap up and then you move up. And people are like, oh, I want to be bidding this, and it never returns because this was an uptrend after all, right? And it's like, for me, it's not really too important. It's not something I look at anyway. The only reason why it's a tiny bit important is because so many people look at it. But even that is, I mean, during an uptrend, no one really cares. So yeah, there's a bunch of CME gaps all over the chart, and they don't all have to close. So that's Bitcoin smack in the middle of the range. I'm going to be looking at the daily close today. I really don't want to be buying, honestly, because the altcoins, like there's been some positive movement on the altcoins, and whenever I see that, I'm like, okay, the plebs are back buying altcoins, probably on leverage again. And what usually happens is when you have a Bitcoin move with like an altcoin move together, they both just react in the same way as in they dump both. And when you have a Bitcoin move and altcoins dump during it, it's usually something that kind of maintains. And then you go sideways on Bitcoin, maybe altcoins recover a little bit, Bitcoin goes high. Like that's fine. This is not fine to me. So I really don't want to be buying. I think there's way too much speculation still. Because like what this in the end of the day, right? What this represents basically, what this trading range represents is the death of all traders, right? Like you had a bunch of traders, or like they're not really traders. It's just like retail gets in, buys this, experiences an up only market, and then they get fucked by this down move. But they're like, okay, I mean, 50% down, I've lost a bunch of money, but I'm still here. I'm still fine. I'm just going to be buying the dip, right? And what happens during sideways movements is all of those people get wrecked. All of these people that kind of entered in the last like half year, maybe even the last full year, and that really don't know how to trade, right? What happens with them is they get into the market and the market goes sideways and they're not used to it, and then they get chopped left and right in both directions. And what you want to be seeing is in that range, you want to be seeing speculation actually die down, right? And then that, in my opinion anyway, is going to be signified by altcoins either staying flat or altcoins actually going down against Bitcoin. And that'd be fine for me. I'm down with that. Let's say we have like a Bitcoin range that just continues for a couple months and the altcoins do like relatively poorly during that time. I would think that we'd probably break to the upside. And if that happens, right, I'm going to switch my bias and I'm going to expect upside rather than downside, at least for the short term and midterm. But what we've seen instead is people got wrecked and immediately started leveraging again, and they get wrecked again and again and again. So, I mean, it's going to be interesting to see how often they can do it and when they're going to stop. And once they do stop, it's going to be much more attractive to trade, because then like you get an actual breakout. Like what happens right now is you get a breakout and apes just leverage in on all coins because they see like, oh, Bitcoin broke out, all coins are gonna get me more money. Like I'm just gonna buy an altcoin because Bitcoin is bullish now, so altcoins are gonna go up. And then altcoins do go up because everyone thinks that. And then you get leverage in the system again, and given it's a sideways market, that's just an easy target for people to jump in and wreck everyone, right? And then the Bitcoin breakout reverses, the altcoin breakout reverses, everyone gets wrecked, and everyone is wondering why. And the reason is because you have a bunch of people that like barely know how to trade, that are just getting into altcoins and trying to leverage it. And until that stops, I'm not gonna be like aggressively looking for buys. I'm just gonna be like mostly chilling, looking at the market. And if the altcoins go down, I'm gonna be looking for buys. And if the altcoins go up, I'm gonna be looking for sells. I just noticed that you haven't made a video like this during the entire bull market. You just don't like when the market goes up. The reason why I don't talk about like technicals and whatever is because there are none during the bull market. Like this kind of thing, the best trading that you can do during this is just sit tight. You buy and you do nothing. So I could be sitting in this like during this half of the market. Could be sitting here and being like, okay, my trading strategy is I'm going to be buying support and selling resistance. The problem is, one, there's not going to be any resistance because we just made new highs. And two, there's not going to be any support retests because this is a raging bull market. So like me talking about stuff makes no sense, because the best thing that you can do is just sit tight, or just be like completely brain dead and just turn your brain off entirely. And I mean, in the first one I can gladly do. Like I have no problem sitting here just doing nothing. But like telling people to turn their brain off is like a really tough challenge for me, because I mean, at the end of the day, what happens is you do that, you get wrecked, right? You do it long enough. So it's kind of time-based thing. And as a trader, for me, it's much more interesting when the market is breaking down, because like trading this is actually trading. Like I can be trading this. You can see how this played, right? You can see that this is a pretty nice technical setup. Now, can you find the technical setup on this entire way up besides like straight up buying every breakout? The answer is no, you can't. Like there's nothing there besides just buying every breakout. And there's not that much to talk about. Whereas in breakdowns and doing down moves, and I mean, the reason why I'm talking so much about like how the market works during down moves is because I want to be buying, right? And I can easily talk about this stuff and get excited about it because this is a technical setup. I know exactly where my risk is if I'm taking this, and this is actually a setup that I took back then. I know exactly where my risk is, and my like the resistance, if you want to play it back to resistance again, whoops, is up here, and that's a really good trade. Now, obviously, if the moment it starts breaking out again, people are going to be mad at me again for saying, okay, I'm selling resistance, right? But for me, I didn't actually sell resistance back then. I sold a little bit higher. But still, you get the point, right? There's much more to do during down moves than during up moves. During up moves, you're just going to be sitting there being bored. Or like being excited for the up move, but being bored in general because you have nothing to do. And during down moves, there's a lot to do because you're always going to have to guess, is this the bottom, is it not? Where is it going to go? During up moves, you're just going to let it happen. So, I mean, for me, which are the market conditions that are more exciting for me as a trader? And definitely down moves. So, not arguing with you there. Everyone can be a guru during bull markets, but the real deal shines in bear markets. I wouldn't necessarily agree to that. I think it's not as easy as it looks to trade bull markets. Like, for example, like you could be trading this, right, on the upside. Like there's a bunch of people that are really good at trading this kind of stuff. They tend to lose like most of their gains just by being retards, like going completely stupid at the top. But there are people that can leverage their way into like riches on the way up. And we've seen that on crypto Twitter. We've seen that like during every moon phase, basically. It's just those people tend to get rich real fast and then lose it all back again. But yeah, I'm always impressed when I see like a bull run genius actually play the market like they want to, because what they do is they just pray. Like they don't even pray. They're like 100% certain it's going to go up, and then they just keep on leveraging up. And I mean, it's impressive to watch, and it's impressive that they can do it, as long as they can kind of hold on. And there's a bunch of people that can do both, right? That can play it completely stupid, but then get out of the way. For me, I am more than happy with just be buying this thing and then selling it to the rally at some point. Like that's more to my style, but I mean, I'm always impressed when people just like, they're like long 10x their entire net worth, and it goes up, and instead of reducing, they just keep on adding. And sadly, what they do is oftentimes they add, and it breaks down, and then they get liquidated and lost the entire bull market gains, right? But it's not everyone like that, so I wouldn't generalize like that. But yeah, for me, like trading wise, there's much more to do anyway in the bear market. Why are people using astrology? I don't understand this. Because they're trying to make money off of you. Like anyone that's trying to sell you astrology, I mean, I don't get it. It's just stupid. yeah, no comment. I don't want to upset people, but for me, it's just stupid. And if you believe in that crap, I mean, I don't know. So yeah, people can do whatever the fuck they want to do, but it's like when you're starting to read tea leaves and shit, I mean, yeah, whatever. So yeah. Um, Alex Wise, yeah, for example, he's done that. Ran it up huge, lost it all back. So yeah, that's Bitcoin. With regards to altcoins, ETH's been showing some strength, and this is going to be actually interesting because I've been quite bearish on ETH on this way down here, right? And I mean, maintained that basically during the entire breakdown. Like I've been saying, ETH is a worse trade than Bitcoin. Now, if you start closing back above this resistance, I'm gonna get back on that. Basically, say that ETH is a somewhat decent trade at that point. I'm still not gonna take it, but I don't see a reason to be bearish on it anymore, on the relative basis. But for me, this means that I'm gonna be more bearish on Bitcoin in general, because I think as long as ETH goes up, there's very little chance that Bitcoin's actually gonna do too well. So you wanna be seeing ETH break down if you wanna see Bitcoin go up. But as long as ETH's showing strength like this, right? Let's say this closes back above resistance in here. I don't really see a reason to be especially bearish ETH, right? And the same is true for the USD pair actually. We actually closed back above resistance yesterday. And this is something I talked about on Monday with ledger status, where it's like you can take a trade from range low to range high here, right? This is like a typical kind of range reclaim, which I'm actually like, I've been thinking about taking, but I'm not entirely sure if I want to, because like the problem with this entire setup is that, like I said, if ETH does well, I think Bitcoin's not going to do too well. And if Bitcoin does well, I think ETH's not going to do well. So it's kind of this weird spot where it's really difficult to be like bullish ETH/USD, because if ETH/USD does well, I think Bitcoin's probably not going to do too well. So it's like Bitcoin kind of drags ETH down at that point and vice versa. So it's pretty difficult on that pair. On the Bitcoin pair, it's a little bit easier. It reclaims this. I think there's a good chance it goes to the next resistance, which is like a little bit higher. And then if it goes all the way up here, I mean, maybe waiting for actually like some bullish action on the altcoins, which I think would lead to Bitcoin and crypto bear market as a whole. But I mean, it would still be like a great trading opportunity, because the thing is, like, the next resistance above there is quite a bit away. So like, I wouldn't hate it. It'd just be, I think the thing is, like, if we get like an old season out of this right now, which doesn't look to me currently, but if we do get one, I think it's just gonna be like a 2018 fractal, in the sense that in 18 we had Bitcoin top, we had Bitcoin crash, we had Bitcoin go sideways, and then what happened with the altcoins was they kind of like started ramping up during this time, right? Started dumping with Bitcoin, but while Bitcoin was going sideways, they just completely went, right? And that led to Bitcoin bear market of like 3 years. And I could see that happen again if the altcoins do well from here. It's just way too similar at that point. So I'm hoping it doesn't happen, because I'd rather have like Bitcoin actually show some strength. But then again, like, there's gonna be great like trading opportunities on the altcoins if that happens. So not the biggest deal in the world. So keeping this in my eyes, I don't know, keeping this on my radar, whatever. If it shows strength today, I could see it like pull some sustained strength maybe into here. And if it breaks that, I mean, there's quite a bit of room to go. And if it does that, I'm gonna be probably buying ETH relative to Bitcoin. Gonna try to figure that out, how to make it like into the best trade possible, because usually what I do, like when I trade ratio pairs, is I try to buy one, in this case ETH, and then short the other one. But given I'm not shorting these days, would be a little bit difficult to do that. But I'll figure a way out. Why only horizontal levels and not trend lines? Because they work better for me. But I mean, you can use trend lines. They're fine. Oftentimes when you like trade with trend lines, what happens is you have like a downtrend and you have a breakout and then you go back into downtrend and then you bought the breakout and you get wrecked. Whereas with horizontals, it's a little bit easier, because where do you put your invalidation here, right? You buy this and then you do what? You have your invalidation down here. Well, that would be just a retest of that trend line that you broke out of. And that could just be the bottom of the move, right? So it's really hard to kind of put in a constructive trade on a trend line, right? Because stop placement is just really difficult. But if you have like a good way and a good system that works for you, go ahead. Can you show where to put the invalidation if you take that ETH trade? So that the ETH trade, the idea for it anyway, and I mean, it's been playing, like it's actually like in the middle of playing out, which is frustrating because market conditions are so that I can't really take advantage of the setup, but this would be the trade. You're basically betting that this is a range fake out. You're targeting range high. And the moment it starts losing the range again, you get the fuck out. So your like actual risk would probably be what? 5% instead of 20, or like maybe a little bit more. And your reward would be quite high. So like that's why I kind of said on Monday that that's a good trade to take. I still think that. It's just, for me, it's really difficult to take it because, like I said, if ETH goes up, I don't want to be in the market in general. So it's like this kind of weird situation. It's the same as we've had in 18, where it's like, yeah, altcoins are going up, but you don't really want to be exposed to the market too much while they do so, because they're going to pull the rug on the entire market at some point. And yeah. If that happens again, right, if you're seeing altcoins pull up hardcore into Bitcoin weakness, I mean, that's just gonna, like, that's what's gonna happen. And that's something that I've said, like, during the 4K top, basically, that, like, altcoiners are gonna get fucked if Bitcoin shows weakness while they're showing strength, right? So you don't wanna be seeing Bitcoin kind of start slumping over while altcoins start rallying. Like that's the worst thing that could happen for the market right now, in my opinion, anyway. And then like if you want to have an example of like what the market looks like when that happens, you just go back to these times right here, and then you look at, okay, what happened during the January of 2018 and why is that bad? So yeah. You buy the retest, same as horizontal. Well, at that point, like the thing is, if you buy the retest, you're not playing the momentum anymore. Like the good thing about trend lines, in my opinion anyway, like it's basically a momentum play. And if you buy the retest, it's not anymore. Like then why not just play the horizontal? Because the horizontal is going to be here anyway. Like if you want to be playing the diagonals, I think you should be looking at it as a momentum play. We've had an aggressive downtrend. It broke out of the downtrend. And now you want to be seeing explosive expansion. If you're not in for that, if that's not how you play the setup, might as well just have this setup. You have like a range, basically the exact same thing that we've talked about in here. You have like your range, it holds, it doesn't hold, it reclaims, it goes. Like that's fine, or even better, I think the opposite side of it, this one, and then it goes. Right, might as well do this, because if you're doing the trend line thing, like I could even draw it like this. Like it's basically the same thing, it's just a little bit worse. A little more inaccurate. So either play it as like this basically, this leg of the trade, or play the horizontal anyway, in my opinion. Like the video too, helps with the algorithms and stuff. Yeah, thanks man. Always forget to say it. But if you want to do me a favor, like the video, always nice to see numbers tick up, be it on Bitcoin or on videos, right? Dude, I'm gonna be watching this like so intensely. There's gonna be an interesting daily close. The problem is like we're still in the crab range, so it's like might not even mean anything, but it feels meaningful to me anyway today. So I'm gonna be looking at this into the daily close, gonna figure out if I wanna be buying or selling going forward anyway, right? So for example, let's say we close below it. What I wanna be doing is I wanna only take like, let's say we close somewhere down here. I might wanna be buying down here, but I wanna be selling it to the first impulse, right? Now, if we close above here, I just wanna be straight up buying into higher. And if you want to be like shorting or whatever, works as well if we start closing below. I'm just not going to do it. How do you figure out where to put your stop loss when buying mid-range? Like if I longed 35.6k. You longed 35.6k, Jesus. So basically right here because of the breakout. Yeah, that's not like, the reason why you don't take that trade is because you can't put a good stop loss, right? Because where do you want to, like, where are you wrong down here maybe? And then your target's up here. That's a pretty shitty trade, right? It's not even going to work like 50-50 because it's just like it's not going to work 50-50 because, I mean, in general, you've had the impulse to the downside, right? So when you have an impulse to the downside into a range like this, generally speaking, you want to be expecting this with a lot higher likelihood to actually break down again, right? It's the same for the upside, obviously. You get like something like this, the highest likelihood play is to the upside, right? So this is like a risk to reward of like 1 while actually in a downtrend, right? So pretty shitty trade. That's why I don't want to be buying at range midpoints. Now, if you buy it on the way up, right? As in, we've had this break to the downside, now we're reclaiming it. As in, we've had this, what I'm trying to say is, we've had this green candle yesterday. We've had this fake breakout to the downside today. Now we close back above 35.6, right? That's completely different because now you know the fake out was the thing that got everyone stopped. We shouldn't really go below there anymore. And then it's actually a good trade, even though it's the exact same point, but the context is a different one, right? You've already had your breakdown. You can even, like, you can just have it this tight. You can also have it a little bit wider, like this, to kind of avoid if this does like something crazy. But honestly, I don't think it should if it's actually bullish at that point, right? So like even with like tight stops like this, we'd probably be fine. So the same trade can be good and bad depending on the timing, right? So let's look at this. You have this, right? Whoops. Okay, let me actually redo this again. You have this, right? You don't want to be buying the support. If anything, what you want to be doing is buying the lower support, right? This is for the aggressive traders that want to be like taking the long trades before you actually get confirmation or whatever you want to be calling it, right? So this is what you want to be looking at because what you're doing is basically you're speculating on price to dip into support and then reclaim it all and close above it. That's a fine trade to take by me, like in my opinion. But if you want to be buying this at this point, what you do is you don't really have a good invalidation at hand, because there's a good chance you rate this intraday down here. So you would have to kind of pull it down here or even lower, right? So at this point, it's a pretty bad trade. Now, later, right now, for example, if you're showing strength, it's a good trade. So depends on the kind of context of it all. I hope that makes sense to any of you. I mean, to me, like that's kind of how I look at these things anyway. Like you don't want to be buying like greedily into a breakout in a range, right? Like you can do that during a bull run, right? You can do that during like straight up only, but you don't want to be buying into breakouts during ranges when you know that there's crabs afoot, right? What you want to be doing instead is you want to be fishing for low entries, basically fishing for dips below support, so that if the daily closes like you want it to, back above support, you have a good entry. A lot different. Or you want to be buying into the rally after it's done the fake out to the downside, because then you can actually quantify your risk relatively easily. What if you close it like 35.3, do nothing then? I mean, I'm not going to be doing anything if we close like not above resistance. Like for me, it's just like, this is an awkward spot. Like I said, I don't like that the altcoins are outperforming Bitcoin. It just shows weakness. Like look at this in a, like you can't look at this in a vacuum, whatever, you know what I mean, right? You look at this, right? What's this, right? What is this looking like, right? You've had a range on the upside. You've had a massive crash. Basically, the entire run has been halted, right? It's not just a pullback, it's a crash, right? Now, what you're getting afterwards is basically like a sliding down market, right? And then also you're getting other cryptocurrencies outperforming this one, right? So like that's a bunch of weakness signs that I don't want to be involved in, right? Now, like if the altcoins don't do as well, that's at least one weakness less. It's still weak, but it's at least something. It's one less worry, in my opinion, anyway. So if you get like a bullish setup, it's easier to take it. So in general, like I don't actually want to be buying too much. It's just if we go back to like 40, 42-ish, I want to have a position because that's a nice trade, right? It's just really difficult to speculate on that while altcoins are actually outperforming Bitcoin while it's looking this shitty, right? There's a big difference between, like, let's say we go up here and Bitcoin's just like starting to grind up and altcoins are doing well too, right? Like there's a big difference there, because now what you've done instead is you've broken down, you've put in a bottom, you've started rallying up, risk on again, right? Everyone is kind of like, okay, we're good again, and then they're buying altcoins because the entire market looks to be risk on. There's a big difference between that and having Bitcoin look like this with altcoins doing well, right? This is shit. Because what this looks like is that everyone's speculating on altcoins getting more and more risky while the market is actually shitty looking, right? You don't want to be having the market look shitty and people get riskier and riskier, right? The market looks shitty enough so that we don't need people to take risks. And if they take risks, there's a good chance that they get nuked just based on the fact that they're easy pickings, in my opinion anyway. So that's kind of how I look at this entire thing. It's basically altcoins do well when Bitcoin and the entire market is risk on. And right now, the entire market should be risk off. So, and I think most people, at least most bigger players, should be knowing that. So the only people that are really punting the altcoins are the smaller ones with leverage, and they're gonna get wrecked if they keep on doing it. And they've been wrecked a number of times during these moves. So, yeah. Stocks ripping, let's go. That's actually a good point to make. During stocks, like when stocks go up, right? The same is true basically for Bitcoin, right? So when stocks are going up, like the risk tolerance of people is higher, so it's easier to be buying Bitcoin, and it's easier to be buying altcoins as well, right? So like when stocks are ripping downwards, you're not going to be seeing like traditional folks pile into this market because they're more conservative at that point. So like you want to be looking at these markets as well. I mean, they're up only right now and have been for a while. So that's like a little bit of a tailwind. But yeah, it's a good comment to make. Like when you see like the traditional markets move higher, you could expect some strength to come into this. It's kind of funny that these traditional markets are still at all-time high, where Bitcoin is down more than 50% during the biggest kind of fundamental backdrop that Bitcoin's ever had, right? I mean, it's good reason for Bitcoin to go up, and it's just not been doing so, even though the entire narrative fits and every other market that actually matters has been going up as well. But I mean, that just could be because we've had a massive run already, right? It kind of overshot it a little bit. So yeah, not easy market conditions. I think in general, like most people would be better off just not doing anything. Like if you're bullish, buy and hold, and if you're bearish, just wait for it to actually turn bullish again so you can buy. But I mean, that's boring to say, and I can't like. I thought I'd just at least explain a little bit about like what I'm thinking. Can you explain why 32K seems like a decent buy this time, when last time it seemed like 32K was doomed? Shouldn't it be even worse this time since it's been tested many times? Good question. So in general, you see this? You don't want to be buying that support again. But now if it's broken down and reclaimed it, you're completely free to buy this a couple times again. And then like the same applies. Basically, the count gets reset the moment it broke down and reclaimed it. So the fact that it broke down, reclaimed it, did this whole shenanigans, means that it can bounce one or two more times from 32K. Now, given it's reclaimed and lost it like twice, it's a little bit more on the scary side of things, but that's just how it is in general. Like you actually, like whenever you lose a range and then get back into it, the support is still like is less risky again. I generally say like this test in here is safer to buy than this one. I'm confused about something. I bought Bitcoin at 8K and haven't sold anything yet. Is it smart to sell some to buy this dip or not, since I'd actually be buying at a higher price? So the thing with like buying and selling and trying to trade this thing as an investor is it's largely shit, right? If you bought this thing because you're bullish on Bitcoin, just keep on holding it. Because what you're gonna do if you're trying to trade it around, right? And I've said this multiple times now, is you're gonna be selling it and then it's gonna go up and you're like, holy shit, I sold this at the bottom, and then you're gonna rebuy it and it's gonna dump, and then you start spiraling and you're gonna lose control, right? It's not what you want to be doing. If you bought this for a reason, keep it for that reason. If you bought this with a target and it hit your target, sell it there. The one thing that I've seen too many people do is they try to day trade it around, even though they're not really day traders. I can't recommend that. So to answer that question, like if you got in for fundamental reasons, and if you got in because you like Bitcoin or whatever, and not for technicals, right? I mean, you should be staying in for basically the same reasons that you've got into it. And if you got into it because of FOMO, but like 8K isn't really an average that like had any FOMO. It's just basically you buying pretty well. Then you should obviously kind of think about, okay, where do I want to actually sell this thing? But in general, can't recommend you trying to trade this around, because you're probably gonna mess more up than you're actually gonna help yourself. Do you have a similar plan as Cred to hope for a nuke into 32K-ish? Or would you be more aggressive and step in earlier? I mean, like I said earlier, like if this actually plays out bullishly, and I mean, this is low time frame wise, it's actually not that bad, right? We've had a reclaim. Basically, the moment Bitfinex started coming back on, or was like about to come on, we've had like a big green candle, and we've reclaimed some. Low time frames, this isn't too bad looking. And if this translates into the higher time frames, into like 36K-ish, that's a more aggressive plan. Like, I don't think at that point it goes back to down there. And if it does, it's probably bearish, right? If we actually hold this, I think the only way for this to play out bullishly is to go straight up. If it does dip back down into the 32K area, I wouldn't want to be buying it anyway, right? So I'm fine with buying this if we straight up nuke today. I'm not fine with buying it if it gives a bullish setup and then nukes it and then goes back into support, because at that point the context is a different one again, right? So yeah, there you go. Okay, I think that was more than plenty. I don't want to bore you guys to death with my musings. If you're close to month green, someone said, this month green would actually be, I'm not entirely sure if I would be more bullish or bearish about it. Like, it wouldn't change anything really. What it would do in general would be like it sets a floor for like at least a little bit, and then bounces, and then it looks pretty shitty, right? Because like any chart that looks like this with a sharp run up into sharp nuke into bounce like this, starts getting me worried, because I mean, we've seen this plenty of times before. So this being green or not doesn't really matter to me. Like, the best thing that could happen on the high time frames is this kind of rounding out, ranging for half a year or something, and then go. Because if it does like close green, maybe does a smaller candle again next month, starts curling up, I would start to expect like this is the top, this is the lower high, and it goes lower. So like the close being what it is, like this doesn't really matter to me anyway. So yeah, I hope that helped. Before I end the stream, I want to thank the sponsor of the show again, Blockfolio. They've been kind enough to kind of support the stream, make it happen regularly, because sometimes I'm like, okay, I'm not really motivated, and I'm like, but I should, because I'm getting paid for it. So yeah, appreciate their support, and their links are in the description if you want to check them out. Like I said at the beginning of the show, you can trade on there if you want to with your mobile phone, but you can also just check your portfolio. And I mean, that's always nice. At least when prices are going up, it's nice to be able to do that. So there you go. Appreciate you guys for coming by, and we'll see each other. We'll talk to each other on next Wednesday again. I think we're probably gonna have a podcast on Friday. So gonna be a week till you see me alone, but I'm gonna be on Monday with weekly open again. So if you can't wait for Wednesday, that's gonna be a thing. So yeah, see you guys. Bye bye.